Good morning. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is January 29th, 2016. It is 9:02 a.m. Eastern Time. For those of you that are here for the first time, welcome. For those of you that are back, welcome back. Let us go to a disclaimer before we continue any further. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website or presentation is neither a solicitation or an offer to buy or sell futures, stocks, or forex, and representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, let us take a look at the calendar before we go to the charts and see what we have for today. There are quite a bit of news that was released right now. So let's see. Friday. See the numbers. Europe numbers didn't come in that great. Swiss economic barometer did come in good. Spanish CPI was bad. GDP numbers came in at par. Money supply year on year for the euro is negative, which is not good. Private loans are down. CPI flash estimate came in at par. Core CPI came in a little bit better than expected. Canadian GDP came in at par as expected. RMPI numbers month on month came in negative. IPPI month on month came in better than expected for Canada, and then GDP numbers for us came in negative. Price index numbers came in negative, and employment cost index came in as forecasted and previous. Okay, goods and trade balance came in negative, not good. And we're going to be waiting for Chicago PMI and consumer sentiment, which should be major shakers in this morning. So that gives us an idea of where this is going. So within the next 40 minutes and the next 50 minutes, we should have numbers that have come up, which should be somewhat impressionable. So let's take a look at this. We'll start off with, I actually want to start off with crude today, and only because here in the Market Analyzer, I have a signal to analyze power dot formations. So this will be interesting. Give it a minute. Okay, so crude. Let us see where this is at. Now this is on the 20-minute. Now, here's the kicker. As this thing continues to go up, and I'm trying to find a reason to go short, but I'm not. Normally, what I like to do is see where this level is at and how it has reflected in the past. Now they've broken through $33. We're heading towards 34 right now. Now they've broken this price level in the past, but then they've bounced right back from it. Now what's wrong with this one right now is the aggressiveness of the trade towards it. Trend dots are very aggressive. The candlesticks are very aggressive. They're using the candlesticks as a support level, and seems like they're going to break through. Now, as much as I'd like to see a break to the downside here, haven't. Before they went long, you can see that there's an imbalance. However, this imbalance does not reflect how they've been settling here in the volume. They've been settling with positive volume. And so that leads me to believe that they're going to make a run for it instead of coming back down from it. Now normally, here's the thing, see this one has very little volume compared to this one. And usually I will take a look at a trade like this and expect them, from the moment they do this, expect a 2-candle warning, which would be this one and one more after that. If in the next candle this does not break above, then it should come down. Now, the fact that we have power dots here, the only thing that I would do here differently is that I would see what the volume was as they were coming in. So the volume here is reflecting pretty strong here. Almost perfectly balanced, but not quite. Now this one, there's an increase, as you can see, in volume and liquidity. Each time, more and more. Now this candle isn't over yet, but like I said, it seems like they're going to press to the upside. Every time they increase their volume more and more and more. So we haven't seen negative volume in any of these candles, and that leads me to believe that they're going to break through this level. That's my only concern. The only thing that is making me wonder right now, and this is why I would need to see in this case why this candle has lower volume than the previous one, but it hasn't settled yet. It's not time yet. So I'd say we'd have to go into a smaller time frame to really read that before doing anything else. 10-minute would do. With the market analyzer, we can go to any different type of pair or futures market because it does the analysis for you. So it makes life easier because it isolates all the pairs or instruments that have power dot formations. So it allows you to look real quickly and see is this trade worth looking at or not. So bear with as the charts come up. All right, Euro New Zealand. This one's going to be interesting. So this one's already began to come down. Let's see. The signal was right out the gate during the Asian session, and then right before the European session opened, literally 3 hours, and it came down from 168.95, or let's just say from the very top, 169 even, all the way down to 160.66. Whoa, that was a drop, and a very aggressive one. Now here, for instance, there is no trade to the downside right now. As much as I'd like to say there is, there isn't, and I'll explain why. They've already broken through this level here. Now they've broken this pivot, they've broken this pivot, and more likely it means they've got to come down to this one. More importantly, is that even though we have bullish volume trying to come in, it fails, and every time they come down. Here they're trying to make a stand, but it's short-lived. Now the problem with this is that they've been announcing, or attempting to announce, that the buyers are going to come in and take control. It doesn't seem to be the case. It seems like the New Zealand's getting stronger based on oil as well. So this one isn't a good candidate yet. Doesn't mean that it won't be, just that right now it's not worth our time. So let me remove these two indicators so that we can move faster. Okay. Let's go to the higher time frame. Let's see why it's on the 30 giving a signal. Yeah, see on the 30 there was a perfect signal here at 3 a.m. my time, which is 6 a.m. in the morning. Great signal to the downside, no question about it. Out the gate, it said short at the end of the day, beginning of the new day, and then you had multiple time frame confirmation on the 10-minute, which confirmed go short. There is no trade right now. This one is not a good candidate. We missed it. Let's continue. Let's see if we find anything else. Euro GBP. Euro GBP. It's trading off of this level. Broke through it. Let's see if there's anything here that would make us Let's go down to a 15-minute. No, we still got room to move down. Let's go down to a 10-minute. No. This one already initiated. 45-minute. Last but not least, let me take a look at a 20-minute. No. Now we're late to this one as well. Let's continue. Let's go see the US CAD. Now this one should be interesting because this one is in apparent congestion on the 30-minute. Let's take a look and see how that looks. All right, change. Let's see. Why are you in congestion? What's your deal? Okay, I see why. Power dots here and here. Okay. Let's expand this out. So this is a previous level. Okay. Let's take a look. Actually, let me go to the 45. Interesting. If it does come up, it'll run up all the way up here. I just don't see it happening today. 60-minute. The 60-minute gave it away. There was the trade right there. Power dot formation. Gave you plenty of time. And right now it's in congestion, so that means on the smaller time frames we could see something. Let's go to the 15-minute. No. Let's go to the 10-minute. No. Let's try the 12-minute. That's always an interesting one. Nope, not on this one. $10-minute. I'm curious. I'm going to add the volume and the price identifier here. I think this just might be the trade that we were looking for. Give it a minute. Give it a second. Actually, give it a minute since they're being so gracious. Almost there, almost there. Okay, here it is. This is what I wanted to see. Yes, indeed. Come on, come on. Let me play, let me play. Okay, here's the deal. So they're using this level, which is a 60-minute level, which we can't really see. Now, see how this candle really didn't do much? The volume was really light on this one. Yet on this one, they threw the kitchen sink to hold it. Now, granted, they have used the trend dot to come down, but it's still slightly bullish. Now, seeing that, and they're at 139.91, which is exactly where I said they were going to come to. From this point, I actually feel very comfortable taking this trade long as an example. And I'll tell you why. Because they've pretty much isolated the price level that they're not going to go to. which is this one, which is 39.78 or 39.80, you could say. Now, granted, we're 10 pips away, but here's the thing, that if I'm going to make a mistake, it's only going to be a 10, 12 pip mistake. I still see divergence to the upside. That's the problem that I'm seeing with here. And the message is consistent that the buyers are going to come in and take control. Now, if this candle holds, remember, I told you that the fact that this candle came in and literally stopped a bearish trade from continuing just made things a little bit more challenging for them. Now, if they do break, then, you know, like I said, I'm willing to take a 12 pip mistake. But the volume divergence is still to the upside here. And this candle has bullish volume. So even though this is a bearish candle, it has bullish volume. You got 170 million, 171, no, 173 million on the buy, 137 on the sell, a difference of 34 million to the upside, 33. You can also see the volume right here. See how it's coming in, how they're reporting it? So the buyers are coming in much more aggressive than the sellers, even though it has a bearish tone in the candle. That is where the deceit comes in. That's where the lie comes in. Because what they're doing is that they're trying to get people to go short based on this, but they're rebalancing their risk, their order book. And by doing so, that means that the next candle, if this one does not come down, because it doesn't make sense, how is it possible there's more bearish volume than bullish volume in this candle? That's the irony of the question that has to be addressed. So you got 51 million, 54 million positive volume in a bearish candle. That doesn't make sense. So if this candle closes and it does not break below this level, even though it's bearish, that means the next candle should come in and be bullish. That's the difference. Now here's where it gets really tricky. See what they did? They changed the point of control in the candle. So the sellers are now offering at a higher price when they should be offering at a lower price. See, they're still having this game. They're moving back and forth. The buyers aren't really buying below this price, 139.85. The sellers are offering, and they're the ones moving this candle, of course, but the buyers are still maintaining that message that they're going to come in and take control. So that is my only concern as to how they're playing this trade. Granted, I did get in a little early, but I believe they're going to come back right. They're going to come right back up. They may have just come down to test this level. So let's see. This is where you put it to the test, pretty much, because the volume divergence is still to the upside, and that doesn't make any sense when you have something like this. Let's change the color. Price action like this, and you have volume like this to the upside, eventually it corrects itself and they define. So this, we may not be seeing the correction right now, but make no mistake, they are testing these levels that we weren't able to see before. This is a 30-minute level and this is a 60-minute level. I usually am not that happy when they break through a 60-minute level, because in this case they went, once they broke this level, they went from level to level. Now this is the final level they would go to, but again, based on the volume divergence, that's my only concern right now, is that I don't think that they're going to play that trade. I think that what they're doing is trying to confuse traders. And you can see, I mean, the amount of high frequency volume in this candle is high. You got 337, 339 million on the buy, 340 on the buy, 342, 317 on the sell, 345, 346, 348, and it's increasing to the upside, but you're not getting any price action reflecting that. And that could be just the deceit. Now here, again, you know, we have the point of control of the seller is changing again because it's reflecting on how the order flow is coming in. So the confusion on this one is strong. I think anyone looking at this trade would say stay bearish, but the volume is telling me no. Don't stay bearish because it's gonna shift, and when it does, it could be dramatic. So that's the only concern that I have at this point. Now, if it breaks through this level, then I'm done. I'm out because I'm not going to let it come down here. But it seems like they're not going to play that based on the amount of high frequency volume that they're putting into this. Now, just because there's a lot of high frequency does not mean that the bulls are going to come in and take control. No, it just means that there is a difference, how can I say this? A discrepancy between the buyers and the sellers. They're not in agreement. They're in disagreement. Such is the case that the point of control is still up here for the buyers. The sellers are down here, and so this is somewhat normal to them, but this is abnormal. And the volume is still bullish. We're in the 386s already. Still difference of 23 million positive volume. So normally when I would be all over this as a short, I'm actually not that keen on the short trade. They would have to come in and push this thing very aggressively. And they got 2 minutes on this candle, so this will be very defining actually. Because normally if they were going to go short, this candle would actually this candle would be extremely bullish, and it wasn't. This was not. They had hardly no volume here, and they've come down and thrown everything on this one. So look at that. You got 413 million, 14 million on the buy, 385 on the sell, difference of 32 million. It's still bullish volume in this candle. Let's see, it's coming back up. You've got a minute before you close. Okay, new candle. Opened up right above these two levels. Let's see what happens. And it's at the zero line, so we're barely getting volume in right now. More negative volume. So this will be very interesting from this point actually. Now remember, this is a bearish candle with bullish volume. So here's where we put theory to test. Normally, this current candle should be bullish based on the mistake that they did here. So let's see how bullish it is. Exciting, isn't it? I was a little bit premature on the entry. There it is. There it is. Who's the man? See, it didn't take a lot of volume to bring this right back up. 76 million on the buy, 52 on the sell, difference of 16 million right now, 63. But it did come back. So That's a good sign. Now the next sign that we're looking for is for it to become a little bit more bullish and actually come up here to 140 even. If it breaks to 140 even, then at that point, the next candle after that should be bullish and we should come right back up to 140.42. And that would make this trade sizable. Any questions? This would be a good moment. But remember, even if it breaks 140, we still need it to aggressively come up and challenge this previous trend dot. So you're talking about a good 12 pip run from top to bottom. That's about, that's a good run. I mean, I don't know if it'll do it. So long as it comes up above 140.03, then I'm content with that. See, that was an 18, 20 pip move to the upside right there. I got in too premature. It's okay. Let's see how it plays. Let's see how aggressive they run this thing. Because this thing should be consistent to the upside from this point. That's why I said sometimes you just have to isolate where they're setting it up. And in this case, they did such a good job that we like them for making that mistake. Now it's just a matter of seeing the follow through. There's one. They made the mistake again here. And then I'll show you where they made the final one. And if you do this is not complicated, guys. This is simple. It's not supposed to be complicated. Now here's where they failed. This is the last one. And you want to isolate it. If you have them do this 2 to 3 times, normally they will follow through on the trade. We'll put just a slot line right there. So here's where they announced that they had to rebalance because they came in aggressively with volume. Look at that. 477 on the buy, 560 on the sell. Difference of 83. Then they did it again here. 261 on the buy, 311 on the sell, difference of 50. Now here it's a little bit more dangerous because as they're coming down, that negative volume or basically limit orders that are not going through. They're not being filled by the buyers. Here they come in and they hold it, and then here you can see that the volume just basically declines as it's going short. 11 million on the buy, 26 on the sell, difference of 14. And here they throw the kitchen sink at it. But as they go short, you have bullish volume. And that's what gave it away. That's what gave it away. So, yeah, I think we're good on this one. Not bad for a Forex trade, eh? Any questions? No questions, really? I'm shocked. I would have expected questions. Now this takes time to master, guys. You're not going to do it in one day, and certainly not going to do it just by looking at this. But remember, we were looking at inconsistencies. Number one, we were looking at the volume. We were looking at the imbalance in the candles, the point of control, announcing that even though they went short with all this volume, the buyers were not that happy. But there's an imbalance here. See how the seller's point of control is at the top and the buyers is below that? That in itself is a clue telling you, no way, Jose. And this one, again, they did it again. They came down aggressively, but look at the point of control for the buyers and the sellers. It's at the very top of the candle, where the seller's point of control should be at the very bottom. That was clue number 2. And again, the volume giving them away. And then this one, of course, basically no volume at all. I mean, they just stopped going down. They just didn't find a reason to go down any further, and the volume just completely declined to the downside. And then this was their biggest mistake, because they had to unload everything that they had and failed miserably at it. And because it had bullish volume, and this is the irony, is that there's no other place that you're ever going to hear a bearish candle having bullish volume. Question. Yes, the imbalance of the point of control is based on where the point of control is at currently when the candle settles. So you saw that here it was changing and shifting. Here it didn't. They basically stayed at the very top, even though this had a tremendous amount of bearish volume, because it did. This one, 311 million on the negative, 261 on the positive, 50 million negative volume. Why is the point of control at the very top? And that's the question that you have to ask yourself. Same thing with here. Why is the point of control of the sellers at the top and not at the bottom? It doesn't make sense. They did it here again. Here, what gave away was not the point of control, but the actual volume. This is why you have to learn to look at both, because when you start to combine both the numerical and the visual, it makes sense as to why, what they're doing, and the fact that they have to rebalance their order book. And once they do that, then pretty much they kill themselves. There's nothing that can change that. But I'm noticing that on the 30-minute, 45, and 60-minute, we're able to see the divergence a little bit stronger. So my suggestion is that you program your market analyzer to have at least 3 of them up, a 30, a 45, and a 60, and then look for entries on the smaller time frames, because whenever you get a signal here, it's usually a very good one, especially the 30 and the 60-minute. Like we saw the Euro New Zealand, great trade, yesterday during the Asian session. Now here's the kicker. See, I don't like this, what's happening here. It came up and it looks like they might use the trend dot here as a resistance level and come down from it. This candle has to make a move up. If it doesn't, I'm going to be very, very disappointed, because what they're doing is that they're going to reverse and come down. And here's where, it's like, is it really there or not? Now, the sellers have accepted to sell at a higher price here. The point of control is here, which is good. The buyers is up here, so it's consistent in its message. But we still need the buyers to come in and really take control, and we haven't had that. And again, my comfort level is that once it breaks above 140.03, then I'll feel more comfortable in on a bullish run. I should have gotten in here when it was at 139.81. I was premature in my entry by 10 pips. Not too happy about that, but this is where you put it to the test, actually. So let's see what happens. This will be interesting. Will it stay or will it go is the question. Let's see the volume here as it's coming in. Yeah, it's almost perfectly balanced. 55 on the buy, 53, 56 on the buy, 53 on the sell. 59 on the buy, 60. If the move is consistent with the volume coming in, then we know that we're in good direction. Otherwise, it'll reverse. And this is actually a good gauge, because this means that crude is also reversing. Sometimes the US CAD will deal with it. Yes, seller volume versus buying volume is here. So the buying volume is 93 million right now. The selling volume is 69 million, difference of 25 bullish. Now it's negative 71, positive 93, got a difference of 23 million. Still bullish volume. And it's not a lot. So if the price action reflects a higher move than the volume that's coming in, that's a good sign. Because that means that there's less resistance by the sellers to offset because they've already offset their risk here where they came down to. So that means that we should have a good run to the upside. Takes time, this is not, it takes a little while to see it, but the same principles applied here as it is in futures. In futures, it's much easier because there's more data coming in faster. So we're able to isolate the trades with more precision, where with Forex, they take their sweet time. And that's what happened on Thursday morning, at 2 a.m. to 4 a.m., during the European session, when we took that Euro trade. It took an hour and a half for them to actually finish rebalancing before we went long on that thing. And it was it's like a 60 pip run. Yes, that is correct. If oil is going down, the dollar is getting higher. What is oil doing right now? I can't really tell. Let me see on Bloomberg if it comes out. Give it a sec, give it a minute. I mean, the Dow's up 191 right now. So that should reflect that oil should be coming up. But let's see, hold on. It's coming up. Come on, come on, come on. Next one, next one, next one. Let's see. It's at 34.35 on the NYMEX. On Brent, it's at 35.95. It's almost $5. So this doesn't really reflect that right now. This may be due to the numbers. Oh, wait a minute. We just had numbers that came out. Let's see. This may be because of the numbers that came out here. PMI numbers. They came out positive. So it's not reflecting the oil trade right now. And then in 6 minutes, we have this one, consumer sentiment. So that may be the reason why we're seeing a stronger dollar, which I don't mind, to be quite honest with you. You have no sound. It's you. There is sound. Yes. So now we're up 10 pips when we were down 20. Now when it gets here to 140.20, that is going to be a very strong resistance level for it to break. But remember, 140.03 is where I want it to break above. If it breaks above that, smooth sailing. If it doesn't, time to get out. Now, I'm not going to kid you. Trading Forex is probably one of the hardest markets to trade out there because there's a lot of deceit, in how they report their information. Like this, you would have never known that this candle had negative bullish volume. I mean, unless I tell you, you would never see it. It's just something that isn't, there for the eyes. Section. No, the Bank of Japan's intervention is not making the dollar stronger because the dollar actually weakened against a lot of currencies. Don't confuse fundamentals that have passed with current action. A lot of people think that that could be a reflectance of, but it's not. If they came out to drastically intervene, which they didn't, then we would see it right away, and the reaction would be, immediate, not later. Right now we're in the later. So this is more reflectance of the numbers that have just come out. There's 3 minutes still left, but now they've broken above our comfort zone, which is 140.03. And if it maintains, then the next candle after this one should be bullish. Normally when they begin a run, it's usually about 4 to 6 candles in the smaller time frame, sometimes 7. So here, for instance, since this is where they began their run, not here, because this is the one that had bullish volume. So you count from here, 1, 2, 3. I'd say we have another 3 candles to the upside. Let's see if that, if that's how it plays. So did I confuse you, or did I actually show you something that actually makes sense? And I want you to answer that question because it's important. What I'm showing you is completely outside your comfort zone and outside the box, because it makes you reevaluate what you've learned. And I'm challenging what you've learned in the past. Let's see, 1 more minute, and then we'll have new numbers coming out. I should have gotten in when it came down to 39.80. I got in too prematurely. It happens. I would have been up 20 pips right now. All right, let's see. This is going to be interesting. 1 minute, and consumer sentiment numbers are going to come out for the U.S. Now, sometimes they already know the numbers that are going to come out. So their programs are already basically preparing for the trade. So them coming down, bringing this pair down was more or less a setup based on the numbers that were going to be released. The numbers just came out right now. So if this candle holds and moves up, then we're good. It may not move aggressively up based on the release of the news, nor do I care for it to do so. I do care for the consistency behind it. Okay, let's see. Okay, not good. U.S. consumer sentiment revised is bad. Now, inflation expectations came in actually better than expected. This is better news than this one. So we'll see how it reflects right now. Now, I'm not saying that we have the best economy, but it's much better than the Canadian one right now. Come on, let's go. Hit the money. It's time to pop. See, we like it when they take their time. They're, trying to get our attention. There it is. Let's go. Fly, 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 birdie, fly. So who wants to be a phoenix? Now remember, once it reaches 140.20, that's when they're going to hit the wall. See, Ben is dedicated. He wants to change in his life. He wants to be a phoenix, but I don't see that excitement in the rest of you. Well, some of you already are, so forgive me for saying that. But for those of you that aren't, you should be excited. You should be jumping out of your chair saying, I want to, Ricardo. All right, so if it breaks above 140.20, we're good. But if not, then, we take what we have on the table and we move on to the next trade. And that is what you need to learn today. Because if you can get into a trade that yields you positive results, and the method that you're using works, you can apply that same method and strategy in other trade opportunities and have that same consistent growth. It's a confidence builder, guys. Don't, jump into trading expecting to make 100 pips out in the first run. I mean, I've had clients that have done that. I've had clients throw the kitchen sink when they see a trade like that, but only because I've trained them to see it. And so when they see it, then they call me in the middle of the night, of course, and they wake me up saying that they made over 100 pips. And I just tell them to send me a wire. Thank you very much and have a good night. But in this case, it's the consistency that we're looking for. The analysis, because you would have never taken this trade long. I mean, this thing was down. Let's be honest. Even if we added moving average, and because everyone talks a good game about moving average. Oh, moving averages, this moving averages, that. And they don't do anything. These are the two most common ones, the 50 and the 200. I don't use either of them because they're both irrelevant. And let's go with the width of 2. And we'll go with another EMA, which will be the 200. And we will go with, actually, no, change the color. Let's go with Old Lace. And give it a minute because it's going to take a minute for it to come up. Okay, so now we have two moving averages. We have the 50 and we have a 200. Did it make a difference for us taking the trade? No, I would have never taken the trade long based on moving averages. Not in a million years. And why? Because it simply did not do the deed at all. So we're still bullish. Now they broke 140.20. It's trading at 140.25. From our entry, which is at 39.94. Let's measure this. That's 31 pips. Can you live with making 31 pips a day? Now that it broke this level, I'm expecting it to come up, and let's see where the next pivot is. Here's where it gets interesting, because the pivots actually map out the next level. Okay, right here. This is where it may not break above. If it breaks above 140.28, then we're good, because that means it'll come up to 140.46, and what a beautiful trade that would make, because that would be practically a 50 pip run instead of 31 pips. However, here's where the next question comes into play. Can you control your greed? I can't control it for you. I can control mine, but I can't control yours. That's a lesson that you're going to have to learn on your own. But if you learn to make 31 pips a day, will that make a difference in your life? I prefer making 150, to be quite honest with you. But there's a lack of liquidity in the market, and so I take what I can get. I don't go above and beyond. So it seems like it doesn't want to break above anymore. And as much as I would like to stay, Sometimes it's better to just take what's on the table, then move on. Let's see if it doesn't. No, it's not going to break anymore. That's it. So let's see what was our total run from our entries here. Our exit is here. 29 pips. I can live with a 29 pip trade. That took no more than, didn't even take an hour. It took about 30 minutes. 30 minutes is all it took. So I think we did pretty well for what I consider to be a very boring Friday morning, because I didn't really find a lot of excitement in the market. Let's see what the other markets are doing. Let's take a look at crude. Remember I said that crude was going to break through? It broke through. It didn't come back. It just broke through to the upside. The Dow continued to move up. You had power dots here in the 10-minute, and they ran. They didn't look back. It was at 1677. It's at 16197. It's a 100-point move. So again, what you're seeing here is opportunity. That's what it comes down to. The question is, do you see yourself taking this to the next level? For you, at least. I've already taken it to the next level for me. That's all that I can share with you. Knowledge and wisdom is all that I can share with you. Is there a price for it? Yes, make no mistake. You're going to pay the piper. I'm the piper. And I'm the piper you're going to please first before he gives you the secret. But at the end of the day, is that secret worthwhile? The answer is yes, it is. It is worthwhile. See, gold. Would I have traded gold earlier today? I would have thrown the kitchen sink at this trade as soon as they formed here again. After this one, definitely short. Would I have gotten out? Yeah, before it came back up. This one, again, I would have thrown the kitchen sink. And then this one again, make no mistake. I would have ripped them limb to limb. And don't get me wrong, this is not revenge trading. Okay, let's get that out of the way. This is just basically taking advantage of their mistakes. See, this is the pound dollar. It came up, then it from 144.12 all the way down to 142.24. I mean, almost a 200 pip run. And I can assure you that there were power dots here on the higher time frames. Let's continue to look. You'll see. We're going to go higher and higher and higher and higher. You'll see that they'll come up because they always do. Sometimes you find them in the most irrelevant places. Now, let's see, 240, 300, 480. There it is, 480. And if they formed here, I can just imagine what they did on the 600, 720, the 720. We're talking a 12-hour lead, okay? Now, if I add the volume, I can assure you that I would have predicted this trade before it actually happened. Same principle that we used in the smaller time frame. Because you see, their algorithms are programmed by individuals. And I'm being kind and professional with their word, because they're not that smart. Really, they're not. What they are is programmers. They're there to create something to manage risk. Nothing more, nothing less. We're here to define their risk and take advantage of their weakness. And that is how you find a trade. So let's go down to the 10-minute. So the higher time frame would have told you, throw the kitchen sink and don't look back. And that's basically it, guys. I don't have much more to share with you today. I would tell you, oh, what a beautiful trade this was. This was an announcement. This was the Bank of Japan being dumb. But what a beautiful trade that was. Would I have been able to predict it is the next question. Let's look. Let's start from the top. Let's see if we would have had a signal from top to bottom. No, nothing there. Let's continue. Oh, 720, right before. They did give a signal here, and there was a previous support level. They broke through it. Now, it looks like they're going to reverse and come right back down, because anytime they do something that foolish, there are consequences for their ignorance. Let's see. No, not comfortable with that signal. No, not comfortable with that signal. Let's continue down. No. See, I would never trade off the moving averages because they just don't work. They're kind of programmed. They're based on price action, nothing more. See, this trade was predictable. This was back on the 26th, on the 29th. This was 3 days ago that they announced go long. You know, if that doesn't tell you anything, I don't know what else to share with you guys, quite honestly. Let's go to the 60-minute. See, the 60-minute did have a power dot here right before, but this is at the end of the close. I need to see something prior to that. The 45-minute, as they were coming down. Let's take a look at the volume here. This is going to be interesting. Give it a second. We're going to put the volume price identifier on the volume. It's going to take a minute, guys, so bear with. Okay, so here on the 45, we identified power dot formations right before. This was literally, this happened here, 1, 2, so almost 3 hours before it occurred. So let's go to a smaller time frame. Let's go to a 15-minute. It's going to take a little while, so give it a minute. We will see you Monday morning at same time, 9 a.m. Eastern. For those of you that are interested in contacting me, I will put my information here. You can decide for yourselves if this is something that you wish to learn more about. Feel free to do so. I'm always around and always responsive to questions. It's okay, Bubba. It's okay. It's drama. It's drama. My telephone number, 818-431-1357. So that's all she wrote, gentlemen. Have a great one. We will see you Monday morning. Bye-bye now.